Lithium Americas Corp is trading live right now at $4.70 a share, up just over 2% on the day. And let's be honest, most people looking at their Robinhood app or Fidelity mobile app see that price and think one of two things. Either it's a dirt cheap entry point into the EV boom, or it's a broken mining stock. The common expectation is that this is the lithium stock, a simple, pure-play bet on lithium demand. It's the kind of name that new investors doing online investing look for, hoping to find the next Tesla stock before it takes off. But that expectation is completely fundamentally wrong. What you are looking at isn't a company, it's half a company. It's the high-risk, high-stakes, all-or-nothing piece of a company that just performed financial surgery on itself, and the market is still trying to figure out what just died and what's left to live. The Lithium Americas you thought you were investing in, the one with assets in Argentina and Nevada, doesn't exist anymore. That company just split in two. This is the central critical fact that most of the retail market has not yet processed. What you are looking at today, this LAC stock at $4.70, is only the Thacker Pass project in Nevada. The other half, the part that's actually producing lithium and generating cash in Argentina, is now a totally separate company, Lithium Americas Argentina. This $4.70 stock is now a pure, concentrated, binary bet on a single, massive, and incredibly controversial hole in the ground in the United States. It's a venture capital play masquerading as a public stock on investing sites. It is the absolute opposite of a set-it-and-forget-it holding you'd find in a Fidelity mutual fund or a Schwab Intelligent Portfolios account. Let's dig into the bull case, because this is the story that is keeping the 470 price from being $1. This is the narrative that bulls and the company's management are clinging to. The Thacker Pass project is without a doubt a world-class asset. It is the largest known lithium resource in the United States. In a world that is desperately trying to build an electric vehicle supply chain that does not run through China, this project is not just valuable, it is strategic. This is why General Motors made a massive $650 million investment commitment. That deal was the ultimate validation. It was a signal from one of the world's biggest automakers that this project is real and necessary. The bull case, the one you'll see hyped on SoFi active investing forums, is that this is the American lithium champion. You buy at 470, you weather the storm, they build the mine, and by 2028, you're looking at a $50 stock that is supplying the batteries for millions of American-made cars. It's a patriotic, industrial, and financial home run. But now we have to talk about the reality. We have to talk about why this stock is at 470 and not 47. The reality that this price reflects is that this company, the new LAC, has no revenue, it has no production, it has no product to sell. It is a cash incinerator. It is a construction project. Its entire existence is a race against the clock. Can it build this enormously complex, multi-billion-dollar chemical processing plant in the Nevada desert before it runs out of money? That $650 million from GM isn't just sitting in a Fidelity checking account. It's conditional, it's tranched, it's tied to milestones, to progress, to not getting shut down by a court. The company is burning through cash at an alarming rate just to keep the lights on, and more importantly, to keep its army of lawyers paid. The stock's daily movement, like this 2% pop, is not tied to the price of lithium, it's tied to financial survival. And the risks here are monumental. This is what separates a professional investment from a retail gamble. First, there's the legal battle. Thacker Pass has been in a legal war for years. While the company has won major, game-changing federal court rulings, the project is still despised by environmental groups and some local tribes. That legal overhang is a constant threat. Any new lawsuit could mean delays, and delays cost millions. Second, there's the technology. This isn't a simple brine pond in a South American salt flat. Thacker Pass is a claystone deposit. Getting the lithium out requires a complex acid leaching process that has never been done at this scale. It is engineering on the edge. What if it costs more than they think? What if the recovery rates are lower than the lab tests? What if it just doesn't work as advertised? And third, the biggest risk of all, the capital. This project's total cost will be in the billions. The GM money is just a down payment. This company will have to come back to the market and raise more. They will have to either take on a mountain of debt or dilute shareholders into oblivion by selling more stock. That 470 price is baking in that fear. It's the market's way of saying, we know you're going to have to sell more shares, and it's going to make our shares worth less. This is why this stock is so volatile. This is not a stock for a SoFi robo-advisor. It's not a component for a balanced portfolio. This is a battleground. On one side, you have the retail bulls and the long-term strategic partners like GM. On the other side, you have professional short sellers and institutional traders on interactive brokers who are looking at the cash burn in the balance sheet and betting on a collapse. This is not a stock you buy in your Fidelity IRAs for a peaceful retirement. This is the definition of self-investing risk. You are not buying a stable commodity producer like Nvidia stock is a chip producer. You are acting as a venture capitalist. You are providing the early high-risk capital in the hope of a massive payout with the full understanding that it could go to zero. The irony is that the safe part of the company, the part that was a genuine financial help to the balance sheet, is now gone. The Cauchari-Olaroz project in Argentina, which is in production and making money, is now a separate stock. The company chose to cleave off its cash-flowing asset to create this pure-play high-risk bet on America. It was a strategic decision to unlock the value of Thacker Pass, but it also means this new LAC has no safety net. It's Thacker Pass or bankruptcy. There is no plan C. This is a very different proposition from buying a diversified miner or even a broad-based Fidelity ETF. This is a true all-in bet on American industrial policy. So, I want to know what you think. Comment below if you believe the US government and GM will let this project fail, or if it's simply too big to fail from a national security perspective. So, as we watch Lithium Americas hover here at 470, up 2% on what is likely just technical noise and algorithmic trading, we have to see it for what it is. The market's expectation is a simple, cheap mining stock. The reality is one of the most complex, high-stakes, binary outcome stocks on the entire exchange. The expectation is that you are buying the EV boom. The reality is that you are buying a construction project. You are betting on lawyers, engineers, and politicians, all while the company is burning a hole in its pocket. This isn't a stock for the SoFi investing platform's automated side. This is for the active tab with a warning label. The disconnect between the dream of American-made lithium and the brutal, on-the-ground reality of building a mine from scratch is what defines this stock. And at 470, the market is telling you that the odds of success are far from certain. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. Brucker. If you found this helpful, don't forget to like, comment, and share. Like